When's the next property market crash going to happen? Is it worth waiting for the crash? Is it worth trying to figure out when the next crash is going to happen? Watch this video and I'm going to cover some information for you which will hopefully make you think very differently about the crash, especially if you're new to property or you're looking to buy your first property. Is it ever the wrong time to get into property? That's a question you may have on your mind, and if you're thinking about investing in property, of course you'll be thinking about that. Now, property cycles, it is believed that the property market, both globally and in the UK, is driven by the property cycle. And you're probably thinking, what is the cycle? How does it work? What does it mean? That is, the property market conforms to a repetitive and a historical sequence of events which can be categorized, and you may be familiar with when people talk about a 15, 20-year cycle, boom, bust, call it what you like. And generally speaking, the property cycle is 18 years long, although it's not a fixed period per se, and was developed by Harrison in his book Boom and Bust in 2005, just before the global recession in 2008. The book makes sense of the UK housing crashes in 1953 to 54, 71 to 72, 89 to 90, and it predicted the 2008 crash because it was around about 18 years after 89, 90. According to Harrison, after a crash, there is a recovery phase, obviously, and it takes around about 7 years for that to happen, where prices start to rise slowly, gradually, and then sometimes quickly. There is then a small market correction for a couple of years where there is a slight drop in prices, and that's when most people want to obviously buy a property. Then the market enters its boom phase where there's a rapid growth for a further around about 5 years before the next crash occurs. But nobody really knows when the next crash is going to happen because most investors are waiting for a crash so they can buy low and sell high. The crash lasts usually for about a couple of years before the cycle then begins to get back to some form of normality, although it takes a bit of time. If a cycle in the property market does exist, it could therefore suggest that there might be a right time and a wrong time to start investing in property. You'd think so, wouldn't you? In theory, you should avoid buying new properties during a boom period as they will be very expensive. But what's the pinnacle of a boom? Well, nobody knows what that pinnacle is, because if we did, we'd both be very rich. The property market booms when there is a greater demand for property than there is supply, so buyers have to outbid each other for houses, which drives up the prices, which is around about where we are now. Okay, houses are selling for asking price, some above asking price, and they're selling quickly, and houses have been increasing every single year. The prices then reach a peak where nobody can afford to buy them, or less people can afford to buy them, which suddenly drops the demand and prices harshly drop down. Therefore, if sticking with the property cycle theory, you should wait for this drop to occur to buy property to maximize your profit margins. Now, like I said earlier, nobody knows when it's going to be boom and bust. So you can't try to play the system because it's difficult to do so. However, how realistic is it to think that you can time this exactly right so you can play the system? There are a number of questions you would need to ask yourself if trying to time exactly when to get into property investing. Who is to say when the next boom will end? The cycle that says that the boom will last for roughly about 5 years, but what if it goes on for longer? Who knows? Can you afford to wait? If you're planning on buying a property investment and going on a particular journey, and if it's to use your pension fund, for example, why would you want to wait for a crash? Why wouldn't you just get on with it and start investing now? Because when you look back, you'll think, I wish I'd have started 5 years ago. Well, why didn't you? Will the profit you make whilst the house prices are booming offset the savings you could make when the crash eventually comes? That's something for you to think about. Run the numbers and see what works well for you. If you're buying a property that you intend to rent out, you can bring in good income whilst the rental market is high, because right now it's reasonably easy to rent out property. Every time we finish the commercial conversion, within 3 or 4 weeks, the whole thing's full. Now, property flipping is more precarious, as you could buy property and flip it, and then obviously, if you flip it in the peak, you obviously make a good profit. If then prices drop after you've bought it and converted it or refurbished it or redeveloped it, well, you could be making a huge loss. What if the crash doesn't cause prices to fall as far as you had been expecting? Then what? Is it really worth waiting? If your strategy relies on the market dropping by 30% and it only drops by 20%, that is a serious miscalculation in my books, which could wipe out your profit entirely. So you gotta make sure that you're very cautious, especially if you're new. If you're experienced, then obviously you can use your experience and you've got more cash there to help you through the rough weather. You are best off working with facts in the present rather than trying to predict the future, because you're going to get it wrong, and you'll be more likely you will get it wrong, because most people who try and play the system don't beat the system, they end up losing out. Given the lack of concrete evidence available for you to predict the future and see if there's greater profit for you to make while waiting, I suggest it's probably better for you to look at the market and look at your own finances and look at the opportunities, and look at the profit margins, and look at what you're looking to do and work around that. Can you afford to start now? If not, why not? The economy, besides property, is working well. If you've got the finances, you've got the know-how, then you need to look at current political and economic climate and what's going on to determine whether it's the right time for you to get into property. If there are high levels of unemployment, this could be an indicator that the economy is unstable. And that might happen with obviously furlough ending and the government changing its support mechanism. That could be a possibility. Time will tell. You may struggle to find tenants for properties if you haven't got the experience, or if you're buying property in an area where you're not targeting the right type of demographic. So be aware of that. Be aware of your goldmine area. High unemployment is also a precursor to a housing market price crash. So look for that indicator as well. However, property is very varied as an industry, and one strategy, which is just buy to let, probably isn't the best way to go. I would say you need to diversify and have at least 3 strategies. So you're 70%, 20%, 10%, and try the ones that fit best with you and your experience and expertise and what you enjoy. For example, a lack of jobs may mean that there is an oversupply of commercial property due to businesses going bust or people busy working from home. Therefore, making commercial property cheaper than it ought to be and it used to be, and therefore you can look at renting commercial property out, but also doing commercial conversions. Spending the period of economic uncertainty converting these to residential use for when the economy rebounds may be an alternative strategy for you to pursue, and there's lots of videos on this particular channel for you to look at in terms of commercial conversions. Ultimately, thinking about whether to invest now or later, thinking about a property crash, looking at the cycle, all of these I believe are unnecessary distractions. If you're investing in property and you're taking a long-term view, then a market correction or even a crash will not be the end of the world unless you've been totally ruthless and you've leveraged very highly and to some extent been reckless, which I'm sure you're not going to be. Historically, even after a crash, average house prices remain above where they were at the beginning of the previous cycle. So that means you're still better off than you were when some other people started off, so don't worry about it too much. The saying goes that on average, house prices double every 10 to 15 years. So even though you may have bought expensive now, in 10 to 15 years, people say, you were lucky, you bought those houses cheap, or you bought that house cheap. So if you tend on investing in property over several decades, the exact timing of when you start shouldn't matter, as long as you stick with it. Location, however, does matter a lot, and you should pay a lot of attention to it in terms of your gold mine area. The UK is often described as having a two-speed property market, with London and the southeast kind of being on a very different scale, and the rest of the country following suit, but obviously prices are very different and the circumstances are very different too. Additionally, there are some locations where properties will remain in negative equity for much longer, even after a crash. So you need to research those areas. Be aware, if you're investing in those areas, make sure you know what you're getting into. So, if you have the freedom to invest anywhere in the country, make sure you look into how the area is performing throughout the property cycle, alongside other indicators like demographics, house prices, and other things which are important to you, large employers, whatever you're looking for. Focus on location, not the timing of the purchase, in order to be successful, because that is imperative. And if you focus on that, and you have a strategy, and you have your gold mine area, and you know exactly what you're looking for, and you take a long-term view, and you don't take unwarranted, uncalculated, unnecessary, stupid, let's say, risks, I think you're going to be okay. Because beating the market, whether it's a stock market, whether it's a property market, is extremely difficult. You and I, generally speaking, don't have the time, the knowledge, the expertise, the know-how to do that. So why waste time learning all that? I mean, be aware of it, understand how it works, but why not spend that time on finding good property deals, educating yourself, working out how property works, and getting into it, rather than trying to beat the cycle. So I hope if you're not into property, you're going to seriously consider buying your next property, be it a single let, be it commercial conversions, service accommodation, or any other type of strategy, rent to rent, HMOs, whatever you prefer. Just go for it, and when you look back in 5 or 10 years time, you'll be glad you did.